All right, what's going on, everybody? We are back, another live session here in preparation for next week. If you can hear me, please let me know in the comments right now, and I'll get going here. So let me just do a couple little things here, click them on. But I'm just waiting on you guys. I could see that there is a delay, so that is why. Usually I start these off a little slower because I know that there is, but I want to make sure you guys can hear me. All right, cool. Yeah, you like the lo-fi beats there, Sean? All right, so let's get right into it. I don't want to waste any time here. We are going to share our screen and we'll get going. So I just want to give a round of applause to all the bears out there. So for about the fourth time since October, we got a red candle on the weekly time frame. So I just, really round of applause. I'm so proud of you. You finally got another one, and this is even better. This is the first time in, let's see how many weeks. I'm just curious. Okay. So since this candle here, we have 1, 2, 3. Oh, no, I lied. Ready? 1, 2, 3, 4. For the first time in 5 weeks, we did not make a new high this week. Wow. So that is amazing, right? And for everybody, in all seriousness, anybody who did identify this, that hasn't been calling for top for about 3 months now, seriously, good eye on that. It's not really my game. So as anybody who's been listening to me for a while, you know how I kind of operate here, and I'm not really in the business for calling tops. That's not really what I do. And really the reason for that is using historical data. So go back in time and you will be able to see that oftentimes you are kind of given a little bit of a I don't want to say signal, but kind of a signal that price is probably going to retrace lower. And that's something as simple as an imbalance on the weekly time frame, right? So go back, or it doesn't matter how far back you go, what chart you go to, it doesn't matter. Look on the chart and you'll see that when we start to retrace lower, you will notice that oftentimes we create an imbalance on the weekly time frame. When we are starting to move higher, you'll notice we create an imbalance to the upside. So it's something as simple as that. And oftentimes you will get an opportunity for an entry. So I'm not worried about calling tops and bottoms. The thing is, on this entire run higher, while I know quite a few people who were kind of bearish throughout, that doesn't necessarily mean that you can't make any money. There are, bearish setups that have transpired every day, really, if you're looking at it from a scalper perspective. But if you are looking at it from a higher time frame or longer term perspective, shorting this thing was not lucrative whatsoever. You pretty much got stopped at every week. And I don't know what's more important, if it's to call the top or so you have a sweet tweet that you can post out there, or what, or to actually make money. That's my takeaway from that, but it is what it is. But anyways, is this the start of a larger pullback? That is the ultimate question here. And while I kind of answered it, we'll dive into more depth, and I'll give you some of my analysis on it, and kind of how I'm operating throughout this, right? So ultimately, for the longest time since October, we had a clear-cut draw on liquidity. What does that mean? Ultimately, when you look at a specific draw on liquidity, that's ideally my target for a specific run, right? And when I did tweet this out, and I retweeted it again today, that I like this low, blah, 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 all, whatever. It wasn't, I'm looking at this, right? Just to be straight up, I'm not going to be that guy who says that. I looked at it from the perspective, here first, then here, then here, then here, then here. Okay. And how do I break that down? Right. So ultimately, I'm looking at these as draws on liquidity. Why? They are swing high. Right. And on the inverse side, you can look towards them as swing lows. Right. So what is my draw on liquidity? Right. It's very easy, obviously, after the fact, to say, oh, yeah, I knew we were going to all-time highs. And, while I jokingly said that at the time, I think that would be really irresponsible to just go around spouting, right? Same thing for those who are going around saying, oh, we're going to crash, blah, 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 all this stuff, right? I think it's irresponsible because, again, when we get to our next point or draw on liquidity, you can make a, what's the right word, I guess, a educated guess based on the information that is presented. Okay. Now I want you to look at this and I want you to see every single time we got to one of these blue lines. Okay. What was created? Okay. And this answers your question, right? So my first draw on liquidity was here. Okay. One of two things are going to happen at a specific draw on liquidity, right? You're either going to get an imbalance to the upside, or you're going to get a wick and retracement. Okay. It's one of two things, right? And while here you might say, oh, well, it chopped around above for a little bit. While you're right, of course. If you were to look at a monthly perspective, if you were to look at maybe a quarterly perspective, you're going to notice that it was a wick, right? So it's all time sensitive. But ultimately, you'll notice that we got that imbalance up through. Great. Okay. That answers the question for me. On to our next draw on liquidity. Okay. What do we see? Another imbalance formed. Okay. What about this one right here? Another imbalance formed. Okay. Now notice how once we started getting higher and higher and higher and ultimately to our all-time highs, you're going to notice that while we made one here, it wasn't necessarily up and through. Okay. And that's alarming, right? And as you could see, we haven't created any imbalance to the upside since then, right? So while ultimately, still until I'm proven otherwise, right, with that imbalance to the downside, ultimately on a higher time frame, there still really isn't, a reasonable explanation for me to say, oh, I'm going short, I'm dumping this market. One imbalance, and I will be totally, completely on your team. But until then, again, I'm just gonna wait. There's no harm in waiting. Because ultimately, when you create those imbalances, what tends to happen? You get your opportunity, right? Each one of these imbalances that was formed. Here's one. There's a dumper. What else? I mean, we can go through each one. Here's one. There's a dumper. So I would just prefer to look at it that way. Does that mean that I'm going into every single day looking to long things? Not necessarily. I did short a couple times this week, I'll say. But the way that I look at it is I'm still going to be using levels from my daily, levels from my hourly time frame, specifically bullish ones, and I will look for bounces at those levels. If market structure is bearish, that doesn't necessarily mean that I can't play that bounce. That just means rather than me look for a run to buy side liquidity, which is your swing highs, right, in a specific sequence, I would just, and I've been doing this recently, predominantly this past week. When we get up to 50% of the range, aka discount of a bearish range, and we've had a bearish range for a lot of this week, believe it or not. I'll show you an example here. This is our hourly time frame, and you're going to notice that ultimately we had my model complete here, and this is the move starting back from last Friday. But there's your high to low. There's your sweep of liquidity. Okay, sell side liquidity, aka a bearish market structure shift. Here is your discount retracement, discount for short opportunities, right? So if this is our range, 50% is fair value of our range. Anything above that, we would consider that a discount. Specifically, I don't trade off of fibs. So I need an imbalance to pair that with. So not only do we have this imbalance here, we also have a bearish breaker. There's your retracement into your breaker, and ultimately you can look at it from even a tighter window right here. There's a mini Mando model in here. There it is. Bing, dump. Okay, and then here's one more for fun inside our overarching hourly bearish trend. There it is one more time. Bing, bearish imbalance, dump. Okay, so again, we did have a bearish structure on the hourly time frame. So while again, I'm not necessarily looking for that massive short move yet, right? Yet, if I see the imbalance on the weekly, I'll feel better about that. But until then, not quite. There's absolutely short opportunities. There was absolutely long opportunities. Now, although we are in a bearish structure, right? Trading the long, it isn't always the smartest idea, right? And I think I just have to be fair in saying that. And simply put, when you are in a bearish range, I kind of lucked out this week that we did have a pretty massive range in terms of numbers, 691 all the way down to 138. So that's a massive range. So me being able to score those 20 points, they were delivered often this week, right? That's not always the case. But you're going to notice that these down moves, look how much more swift they are than your up moves. You had a couple nice up candles, but ultimately your really quick, strong, sharp moves, which ultimately as traders, that's what we want to catch. Those were to the downside. And, that wasn't really something that I was looking at, as again, I'm just kind of still waiting on that weekly imbalance to form. Until then, not that I'm looking for longs. I will take shorts if they present themselves, but I just don't want to get carried away and go and buy monthly puts and sit in them just yet. That's just me. That's how I operate. I would prefer not to try and call tops. So with all of that being said, we do have a bit of divergence here between NASDAQ and SPY. Okay, so first, obviously this is what we have currently for NASDAQ. Take a look at SPY. You're going to see the difference more on the hourly time frame. So here's just your difference. SPY is a little bit stronger at the moment. Okay, still massive range. So ultimately, if we are to see some sort of imbalance, our expectation would be, okay, we're going to retrace into discount, right? If we retrace the discount, it's going to be very far away, right? SPY, it would be about, what, 400 points, right? At that point, I think a lot of people will probably be calling for crash again. But that's ultimately, it's a huge range, right? That's just a byproduct of a big range. Okay. So I just want you to see that would be SPY in comparison to NASDAQ. On the NASDAQ daily, you're going to notice we took out relative equal lows today. So here and here. Okay. Why is that noteworthy? Well, if price bounced here, right? Obviously, somebody had to go long here. Okay. For price to bounce here, what had to happen? Somebody had to have go long again, right? And if you buy the idea that the market is driven by liquidity or money, right? Why wouldn't price come on down here, take out these sell stop or these buy stops, I'm sorry, and run higher from that point, right? To me, all that's telling me is that somebody went long here, beefy order, right? Somebody went long here, beefy order. Okay, that's double the pool of liquidity, double the pool of money for the market to come down and get in order for it to make its next move. Okay, and ultimately, that was to me more of a magnet. We really couldn't pull away from that level with those two pools of liquidity basically untouched. This is just one thing that's noteworthy. Okay, on our daily time frame, that ultimately we still are in a bullish imbalance here. But okay, let's just take a look here. From that low to this high, retracement, not quite in discount. That tells me the range is not set. Okay, how about here? Discount retracement, run for highs. We ran for highs, so my model is complete here. And if my model completes, what do? I move it over. What was the price run that took out this high right here? That low to that high. You'll notice price gets into discount, but there is no imbalance down here. Price stutters, ultimately rolls over, taking out relative equal lows. And as a result of this, on the daily time frame, you technically have a bearish market structure on NASDAQ. Okay. Do I know this is the low? No, not necessarily, but it's just something worth noting. Moving forward, you have imbalances, no fair value gaps. You just have the volume imbalances, aka gaps down. Okay. And you have two of them right in discount of your now daily bearish range. Okay. But here's where things get a little tricky and where they throw a wrench in at you. And simply put, it is ES. Okay. So let's look at the daily on ES. Here it is. Okay. From your low to your high here. Okay, that was the price run that took out these relative equal highs, right? Second high did not take out the first. Two pools of liquidity here. And ultimately, this is our range. No discount retracement. Okay. no discount retracement, close but no cigar. You also have relative equal lows there. One more time, low to high, no discount retracement. Okay, so we're still technically on the daily time frame bullish on SPY. Okay, so that's different from NASDAQ, which is technically bearish. Okay, so what does that tell me? That tells me that we're in for a bit of a headache. Okay, PA might not be as clean and true as a result of this. It's happened a few times over the last couple years that I've been using these concepts, and ultimately, it's not as fun. It's not as clean. It's not as true. Okay. But ultimately, we left relative equal highs up here. Now, with that being said, we have relative equal lows below. Okay. My expectation is that price does first go into discount, preferably grabbing these relative equal lows on ES here. Okay. Getting deeper into discount. There's your imbalance in discount of a bullish price range. From that point, my expectation is that price does move higher. Okay, moving, forward. But I think this is what needs to happen first. So it would be, some sort of move like this. And of course, it's not exact. I'm just kind of, eyeballing this, but that would be kind of my expectation for what happens, right? And I can use a few, justification points for that. Really, we'll go through it in a little bit, but you're going to notice a lot of these charts are not broken. Um, we have not gotten any bearish market structure shift on a lot of different names. Okay. So what is going to be the driving force for us to get down here, right? I don't expect Apple to break and shift bearish on the higher time frame. I know it's been ugly for a while, but technically still in a bullish trend. Tesla is as deep as you're going to get into discountable bullish range before breaking. Okay. Um, what else? There's a bunch of names. Google actually doesn't look all that bad. There's a few names that still, right, didn't break, didn't shift market structure. But where is a move like this going to come? Because ultimately, I mean, it's really not all that big. I shouldn't say that, but about 70 points, 70 points to the downside. How are we going to get there? And ultimately, as much as AMD's setup is pretty solid, I'm thinking that it's probably going to come from NVIDIA. Being the one that just cools off for a little bit. I'm not saying that it's done. I'm not saying the run is over, but we're going to get to that as well. Just a few names there that ultimately lead me to believe that. But now going back to the hourly, of course, we have a new bearish structure going into next week on NASDAQ. So, me referring to NASDAQ, it's just QQQ. Same price action, just different numbers. The reason I look at NASDAQ was obviously I trade futures, but even if you don't trade futures, I'm getting more information as futures are 23 hours a day, 5 days a week. To me, additional information, no brainer, right? So ultimately, high to low, discount retracement, run for lows. Okay, so at this point, we look and say to ourselves, what was the price run that took out these lows here? And simply put, it's here to here. Okay, so that's what we're currently working with. We do have an imbalance here in discount, which is ideal, which is great. So, and there it is. Okay. Now, going early to start off next week, we don't have any clear cut. Okay, we are going to move up here first, then we're going lower. Why would I say something like that? We have a bullish order block on the hourly, but we do not have any imbalance to the upside from this point. Okay, so without that imbalance, I do not feel confident longing this to move up into here just yet. Okay, when that imbalance occurs, at that point, if I'm not too close to discount, maybe that's a long opportunity, but ultimately, our structure is bearish. I'm expecting lower on the higher time frame, not by all that much, but just to get us into discount of ES's daily range. And that's, kind of currently where I sit with all of that. The last piece to this puzzle, something that not many people look at, but it's a pretty nice indication, is the dollar. Okay, so if we're to zoom in here, and the last time we did a stream, you're going to notice I had this drawn out, right? Look where we currently sit. Okay, so here's a bearish imbalance. Okay, this is what it was at the time. We closed that big time. Okay, so while we do have this bearish imbalance here on the weekly time frame, much smaller than what it was prior, best case scenario for bulls would be price retracing up into here and rolling over and making its way back down into this area down here. Okay. If price is to run higher and go get some more liquidity, or maybe even get into this bearish order block, you have one bearish order block here, one bearish order block here, and another one here that we worked on and ultimately rejecting at this point. But this is the big look for me moving forward. That will be that extra little layer of justification for me to make decisions moving forward from this point. So that is currently where I sit with the dollar as well. So with all of that being said, obviously individual names are making up the indices that I'm talking about. So we can look at specific names right now, of course. And again, I use those, do I always trade off of all of these? Not necessarily, but to me, it is valuable. Even if you only trade futures, or even if you only trade SPY, or even if you only trade QQQ or whatever it might be, I think it's important to kind of map out what you think could happen on some of the bigger names inside that index. And, it can really help you as a little bit of a driving force, right? You might not be uber bullish on, say, NASDAQ if you think Apple has lower to go, right? It only makes sense. Apple, big weighting, Microsoft as well, right? That's another one. So say you think Microsoft and Apple are bearish, if the setup looks pretty solid on Qs, you might rethink it a little bit, or you might look harder at something like Apple or Microsoft. Maybe you're torn. You can't really make a decision. So instead of kind of just throwing stuff at the wall and hoping it sticks, maybe that's just a situation where, you know what, maybe I'm not going to take those monthly longs or monthly puts at this point, because I'm getting crossed up a little bit. And that's kind of where I'm at just overall in terms of SPY and QQQ. This hasn't happened a lot over the last couple of years, really. But we're currently at a crossroad, and we're going to have to kind of see where things shake out from here. So those are just, in general, just some general ideas on what I think we could possibly see moving forward over the next couple of weeks. But to me, longs are not dead until I see some sort of imbalance to the downside. And that's it, really. You can look through all of these, use past data. It's your friend. You can use all of that to kind of indicate to you when you think price is really going to roll over, right? And you'll get the people jumping up and down at that first imbalance down move, maybe the one that you missed, but guess what? They were probably bearish this whole way up. So it's just kind of how it works, and it's funny how it works. But so yeah. Now let me pop on over. If you guys have charts you want to take a look at, feel free to throw some names in. I'm going to start on my own while you guys, can get together with some stuff that you're thinking about. But let me just look at the comments really quickly here. Yes, Fatih, that's what I said. Yeah, we can look at it from a monthly perspective too. So hold on. I think I have a monthly chart here. Let's say. Yeah. Let's look at the monthly. Okay. Yeah, see, it's a little funky right now because we just had that contract roll. So okay, so here's your low to your high, here's your discount retracement, bullish imbalance, turtle soup, run for highs on the monthly time frame. Check, beautiful. Okay, so from this point, yeah, see, all these imbalances are off right now. I got to fix them. Hold on. This one is not, though. There it is. Boom and boom. Ain't that something? All right, hold on there. There, good, and there, and there. Beautiful. Okay, so now let's do it for the run up here. Hold on. Okay. Beautiful. That was your last little retracement there into October from the highs of last summer. And here it is one more time. So if we are to, hold on, let's just see. Okay, and so you do have a monthly imbalance, a little bit lower. Here's the thing. Let's zoom in really quickly and just hold on. Okay, let's just see if make sure there's no volume imbalances here. No, there's one right here with the fair value gap. So there, good. And then, okay, so we prevented a fair value gap from forming this month. Okay. So let's just see. That's nice. All right. So that's really where we're at. Is this something that would make sense? 17,523. Let's look at it from the weekly. 17,523. What does that line up with? Here. Turtle soup and maybe. It's just worth a look. Let's look at ES on the monthly too. Okay, so again, just by the looks of it, much stronger here. If we just zoom over just a tad. Okay. Discount retracement, bullish imbalance. Beautiful. Okay, so from this point here, hold on, I got to just fix some of these. All right, so there it is. Okay, there's one. We had that contract roll this past week, and it kind of messed up my charts. So hold on, there's that, and then there's that. Oh, whoops, let's do good. And now let's just zoom in on our current run. Again, do we know this is top? Not necessarily, but this most recent run on the monthly time frame, it looks something like that. Your discount would be down here, 4.7, yeah, which is kind of where we identified on the weekly discount level as well. So it's the same, but it's to me too soon to tell. But you also have that imbalance right there. So just worth noting, SPY monthly imbalance through buy side. So that's, again, just something to think about as we move forward here. So that would just be from the monthly perspective. But all right, let me pop back over and we'll get going. Okay, so first and foremost, sorry, Jacob, I usually just do that with the group. So I'm just gonna stick to charts here. So first and foremost, I want to go over one that looked pretty solid to me. I actually didn't follow up with it to close the day. I was done pretty early today. So let's see, and it's AMD. Okay, so here we go. We're looking at AMD right now from the weekly perspective, and let's just zoom in on in. Okay, so you will notice that obviously on the weekly time frame, it's been a burner, right? This is something that you guys can go back and look. Just do at MandoTrading with the $ AMD. Go back to around, I don't know, any of these late January, early February, where we were kind of chopping around on AMD. I was just kind of alarmed by how we were holding previous, quote unquote, previous resistance turn support, right? Buy side liquidity, right? We held that and we ended up making another leg higher. So here's just, I'm curious. Do we respect this yet again for another run higher? Gap downs on the weekly. If we're bullish, those gap downs, typically will lead to an order block. Okay. Gap down, order block, gap down, order block. Where else? I mean, this happens quite a bit. Gap down, order block. I mean, technically, I know it's small, but see that where your close was? Gap down, order block. So gap down, order block. So again, I'm not so sure, but just worth noting on AMD as well. But AMD on the hourly time frame still doesn't look too bad, and that's what I kind of wanted to get into. So if we're to go over to our hourly, type in AMD. Let's see, ready? Okay, so here's where we're at. Here's your low to your high, big range. Okay, if we were just to kind of zoom out here, you're going to notice no discount retracement. We did not get to 50% of this bullish range. Okay, it is what it is. actually a couple Thursdays ago, I was like, oh, I missed it. I had drawn out like what I wanted. I wanted it to get into discount, then it didn't, and it is what it is. But here is what you got on AMD so far. Big range did just get into discount, okay, and you'll notice after that was that previous buy side right there, 184.92. Price respected it so far. This is the thing I'm curious about right here, and I meant to zoom in. Hold on. Okay. What is this low? 184.03. And this low is 184 flat. Okay. So we have a low, high, lower low by 3 cents. Doesn't matter. Imbalance up through. We can look towards this candle acting as support moving forward. That is a bullish breaker. Okay, so I marked those in black. And you also have a bullish fair value gap here on the hourly time frame. So not bad so far. So let's just draw. We can even draw a little mini range inside our overarching bullish range. So we can look from this low to this high. Why would I do something like that, you might ask? And we took out this high with that price run. Okay, so with this being said, let's see what this high is. 193.79, 193.77 relative equal highs. Okay, so preferably I would see AMD retrace into discount, and look, bodies can respect this, but if we can get a wick down into discount, specifically this breaker, relative equal highs above, so it would be 193.77 with buy side liquidity right there at 196.95, and that's when we get into a bearish imbalance. Ultimately, again, the range and structure is still bullish, so I wouldn't really anticipate this being much more than just kind of a speed bump or give us a little bit of a discount retracement for its next move up and through. You got a few of these coming up here, so but that's what I'm looking at on AMD. I thought that was one of the better setups. I posted that one last night to everyone, and the reason I did it was just based on where we sat in that hourly range. It was pretty bullish, so that would be AMD. And this is, again, this is not going to be a low resistance liquidity run by any means. And what that means really is you might not see that crazy imbalance candle just shred through. You do have a lot of resistance to work on. So if I had to guess or make that educated assumption, maybe something like this, and all the way, right, until ultimately we complete my model there on the hourly time frame. And that is obviously if we don't get any bearish structural shift. But that's where I'm at on AMD now. Name looks pretty good. So let's get into other names right now. I got a bunch that I want to go over. So let's get, let me make sure I take this. And I got to get these off. I don't know why it does this. I think it has something to do with my settings where the crosshair is purple on this. Oh, yeah, it is. It's like, I think it has something to do with like scales maybe, where it's like showing like the breaks in time. I know if oh yeah, we don't care for this. I don't even know how I would do it. Let's see. Good. There it is. Sorry, I just want to get that off because it drives me nuts when I'm looking at my hourly charts and I'm like, all right. So that's currently where we sit. I know it's a little fuzzy, might not be the cleanest look, but this is currently what we got on AMD. Maybe the daily will be a little bit better. Hold on. Just for visual purposes here. Yeah, okay. So hold on, let's get rid of this for now. And we have one more bearish volume imbalance that we got into and rejected to close out the day here. This looks terrible. I'm going back to the hourly. Sorry, it's going to be a big image this week, but and we'll go here and boom. Okay, so let's zoom it. All right, so if you just popped in, if you're watching on YouTube, please like and subscribe. I appreciate it. I just got partnered with them, so that's cool. If you're watching on X, share it, drop a like on the actual tweet with this video. I'd appreciate that. So this is what we got on AMD. Let me download it because I want to post some charts this weekend. All right, let me come on over and we'll look and see what people have. Let's see. Tesla. Okay, let's look at Tesla. So Tesla's been so annoying, but here's what we currently have. Structure still in place. Low, high, and then you got this, stair step essentially. Each one of these has been that bearish imbalance, bullish imbalance. I'm sorry. We've bounced, bullish imbalance, we bounced here, bullish imbalance, bounce. Right now, it was very small, and you're technically currently under it. Where it kind of gets funky is here. Sent this to you guys last night as well in the group, but there it is. Let's zoom out. So where we did bounce was our final volume imbalance that was left unfilled on Tesla's chart, right? There it is. Boom, perfectly to the absolute tick. If you zoom in on that, bing, and that was it. That was the last one. So, ultimately, I didn't mind scooping a couple more shares, which I'm obviously down on, but not all that concerned with Tesla moving forward. The one thing that would be kind of annoying, sweeping this low here, which would technically shift your market structure, but you're still turtle souping into a bullish imbalance on a higher time frame. I know this sounds crazy, but if we were to go to our yearly outlook, and ultimately if you look at Tesla from a yearly time frame, you're going to see this. Hold on, where is it? 12 months. Here it is. So what we're currently working with on Tesla is sorry, it's a little messy right now, but here was the low that took out all previous highs, run up, discount retracement, bounce, and that's where we currently sit. So technically on the yearly time frame, your drawn liquidity, it would be higher. So would the turtle soup essentially shift market structure? Maybe for a short period of time, but ultimately I'm still thinking Tesla moves higher. So but that's where I'm at currently with Tesla. If I mean, I don't, which is good. This is, I feel fine buying it right now, but the way I look at it is, did we just put our foot in the ground and balance the entire price range prior to a run higher, or is price going to come, sweep this low, get deeper into this imbalance down here before a turtle soup type move? And that doesn't necessarily mean we're going to run all the way up back up, but again, this would technically be bearish structure on a smaller time frame, with these imbalances being in discount of that range. So just all worth noting moving forward on Tesla. So that's where I'm at on Tesla. Let's see. Tesla has been respecting the model. I mean, structurally, it's still intact. I mean, look, I've had I guess it's a good thing because I don't necessarily trade it every day, but Tesla has been the most up and down trade for me over the last couple of months. After we made this nice move higher, once we took out this high, my automatic thing was, let's wait for some sort of discount retracement. You got your discount retracement. So each of these, I've been kind of playing it, pretty religiously, and I've done well on these bounces because ultimately I'm looking for highs. The problem is, I got spanked on, well, I forget if it was December or January of this year. So yeah, it must have been December. I got spanked in December. I'd played it successfully prior to that, this run up included, but I really wanted price to take off and go get these highs, and ultimately, obviously, we rolled over. I played it well on this way up, which really saved me because I got rid of my March expiration, and I was looking to get back in for April. I tried and, almost immediately got smoked, and I got out of it. And ultimately now I really have nothing other than the shares on that. But it has been that up and down trade for me. It's the hardest one, which I guess is a good thing because I don't trade it every day. And for that to be up and down, that's fine. As long as Nasdaq's not up and down, I'm happy. But that is Tesla right now. Really difficult, to be honest. So that's where I'm at right now with Tesla. Let me just see some of these. Um, Below 68, do you cut trades? No, not necessarily. I mean, if we look at it again, just like where you see Tesla on the screen, the way I look at it is like, where does the trade really go bad, right? Oftentimes, if there's no imbalance down there, I will, right? So if you have that, it's really the lowest imbalance is the one that I'm targeting. Those 62 to 79, they're kind of generic. Um, I'm I don't know if there's really anything to them. Um, because the one frustrating thing is like, okay, are we going to bounce out of 62 or are we going to bounce out of 79? To trade NASDAQ or something like that, you have to be so precise. You can't mess around, right? So if it's 62 to 79, that right there on Tesla is a $25 range. You can't do that on NASDAQ. You'll get smoked. So again, that's kind of why I don't know if I value fibs really at all. They're really just for measurement purposes, but I kind of just look for, the lowest, imbalance down there in discount. But ultimately, to me, the trade would go bad, AKA, which it did, not this past week, last week, here, because this was our final imbalance here. You have a bullish order block here, right? And if you go to the daily, and here's a bullish order block too, but if you go to the daily, you had that last imbalance. Could it bounce here? Yeah, sure. That's why I didn't mind adding some more shares. But, ultimately, if it were to go here, I wouldn't be all that shocked. That would shift market structure, which would be crazy. This would be one of the first ones of the big names to do it. Which is crazy, right? People have been bearish on Tesla for a while, and while they've been right, I've been wrong. Ultimately, you really haven't shifted just yet. So, but to me, trading using this type of idea, think about it this way: like if you were to use every imbalance as your kind of roadmap for the trade, like Tesla would have crushed it for you, right? And that's why, again, I on the runs higher, I was great. My mistake was I didn't think we would keep making those escalator type moves higher and the elevator down, taking out lows. So for example, I wish I had the exact, numbers here, but I'm fairly positive that I went long here and I got stopped out. Fairly long, positive, because we made that run higher. Here was your retracement into a bullish fair value gap, and we melted it, right? That's really the difficult part for me on Tesla right now. So, really, the saving grace to me on this name, it would either be, look, we filled every imbalance on the daily time frame. Price is balanced. The only imbalances are overhead at this point. But do we need liquidity to get there? That's the ultimate question, right? So think about it. If what had to have happened there, right? Somebody had to go long. And if that's the case, our expectation would be that below that area, you'd have stop losses or stop loss raid. And taking out those orders would generate money for a move. If you're to get an imbalance down through there, that's real ugly. Then you might see these, which I don't really think that's going to happen, but that would be nuts. So that's kind of where I'm at on Tesla right now. Let me just see any questions before I go to the next chart. If you're newer here, just apologies. Sometimes the names of the charts that we're doing kind of get backed up. I will get to them. I usually just set a time where I'm like, all right, I'm not doing anymore after this point, but I'm still rolling right now. So we'll keep on getting them done. Just might take a little bit, so apologies. But I like having some. So if you got some more, feel free to throw them in. So that's Tesla. All right, let's move on to Microsoft. Unfortunately, I'm going to tell you right off the bat, Microsoft really not for me at this point, and I'll explain to you why. Here's Microsoft. Okay, so on Microsoft, another high, massive range, right? ultimately big weekly range, and for that reason, I don't really feel all that great about continuing this long at the moment, right? That doesn't necessarily mean that an opportunity might not pop out for us. But even here, if we're to look, let me just get rid of that. That was our previous little run, but let's just walk this up. So there it is, discount retracement run for highs. And I'll zoom in just so you guys can see it more clearly. So that's my model completing itself. Good. Okay. So from this low up to this high, no discount retracement. Okay. Discount retracement, bullish imbalance, run for highs. Great. Okay. So now we can slide it on up. Okay. This was the run that took out that high, right? And you go to each candle. Was there a discount retracement? Nope. 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 Absolutely massive range right now on Microsoft. So not only do you have that price run, but you also have this one. Okay. Does that mean you can't look at this from a little smaller duration of a run? No, you can. So from here, we took out that high with that run. Again, no discount retracement. You do have relative equal lows. 1, 2, 3, 4, right? No new lows. But with that being said, you can also look at it like this. Ready? So price run that took out these highs here. Okay. And just worth noting that when you do this and when you crunch the range and knowing that you have a higher time frame, larger range, there's a chance that this is less effective as a result of that. But you'll notice here from this point, you do have a discount imbalance right here. Okay. That's in discount of what your bullish range currently is. And at that point, the trade kind of goes bad at 401, and below there, I would expect, 396. And then below that, this imbalance here has been filled already. While price respected it great, it is filled. This one, not quite. So do we see that as a result of it? And I think that's where I have my, yeah, I do right here. That's where I have my alert for it. So not interested at the moment. Does that mean that price can't get into here and take off again? No, totally can. Just, I try and get the cheap discount, especially when I'm looking to go long on something for a while. So that would be Microsoft. Okay, so let's keep on rolling. IBB. Okay. I definitely don't have this one done, but we can do it together. It's fine. All right. So here's IBB. All right. So if we look at it here, higher time frame liquidity sweep, discount imbalance here. Let's just see, because this is very similar to Tesla, where you have, let's just go to each high. Okay. No, there it is. Discount retracement, run for highs. Okay. So just keep this in mind. Keep that range in mind. Okay. What was the run that took out that high here? Okay. There it is. Discount retracement. Whoa. Turtle soup. Run for highs. Okay. So is this a possibility for something like Tesla? It would look exactly the same as this, minus a couple lower lows that we made. But ultimately, you had an overarching bullish trend that took out a low, technically shifted this short-term target bearish like this, right? And ultimately got smoked. I bet you the higher time frame or monthly analysis on IBB probably pretty bullish. Yeah, it is. Okay, there it is. Yep. So, while you are technically working on a much higher time frame bearish imbalance right here, if market structure is bullish as it's showing here, it's a monthly time frame. It could take a while, but the expectation would be for higher. Now here, currently on the weekly, this is where I don't necessarily love it. So we took out that high with that price run. There's your discount retracement. There's your run for highs. What was the low that started that run? From that low to this high, no discount retracement, and here we currently sit. So while we are currently in a premium of your bullish range, that's okay. That doesn't necessarily mean that it needs to go down. I'm just looking at a lack of imbalances until about here. Let's go to the daily and just see if we can figure or see any more any more signs. Oh, why am I putting F11? So sorry, I'm burnt. All right, so here it is. Where do we currently sit? Very similarly on the daily, but we can look at it from this perspective. Again, I think the probability just it slightly decreases when you look at it from a much tighter range like this. So, what was the run that took out this high right here? Right. Some of you might say here. Right. Well, if we do that high, low to that high, look, price hits 50% bullish imbalance and runs higher. So I can't use that. Right. Um, so this is what we currently got. And so far, so good on IBB right here. There's your bullish imbalance. Okay. On the monthly, I noticed that we did have a couple highs in the mix there. Let me go back over here and just check. Okay. We swept them. We swept those highs, but that's all right. We got into the monthly imbalance right here. Not quite into discount, but so far, so good. Um, so that's unfortunately not very helpful, but this would complete the model 141.16 with the assumption that, in this case, ultimately, to me, the trade really doesn't go bad until that low is taken at 34.08. So really not really great in either direction in terms of RR. What is it like, $6 for a risk of $1.90? It's all right. It's not bad, but ultimately over time, I think it will go higher. But the thing is, when we have this type of situation, I don't love it until I can get some sort of discount. That's just the headache of it all. It just doesn't meet the criteria for my model, and that's why I'm not into it. So, oh wow, I just got an alert. Palantir Monster Inside Trading Alert. Peter Thiel sold 7 million shares. Huh. Okay. So that's IBB. Let's keep on rolling on here. AI was looking great. The weekly close is dangerous. All right, we can look at that. I think I posted AI too. Hold on. So AI. Whoops. Okay. What was dangerous about it? Looks okay. Still fine. Low, high, discount retracement, run. We have all imbalances to the upside are filled. Here's the retracement into discount. Again, you can look at it from a smaller time horizon. What was the run that took out that high right there? That low to that high. Here's your discount retracement, bullish imbalance. This little shorter model would complete at 38.30 with ultimately 48.87 being the destination for me. So, that's AI. So yeah, the weekly, no. I would have been much more alarmed if we got a weekly close specifically below 25.92. That's no good. That would be below the bullish order block there. But that is AI. So let's come back over here. Let's see what else we got going on. Adobe. Okay. Yeah. So I don't really trade earnings, but go back about last week, we cranked that. That idea was stellar. So we can look at it from this perspective, of course. Overall, we have again, market being fractal, higher time frame bullish trend, inside a medium term bearish trend, okay, discount, inside a even smaller time frame bullish trend, inside a even smaller bearish trend, okay. So ultimately, over time, I'm anticipating Adobe to move higher, and we just hit 50% of our bullish range, but you'll see how my model played out bearish here. So ready, there it is. So by taking out that low, what was the price run to do it? That high down to that low. Here's your retracement into a discount bearish imbalance. You also had a bearish breaker. There it is. There's your puke. We took out sell side liquidity, hit 50%, and look where we bounced so far. So just worth noting that we have this right here. Okay. So we did get into discount, but that is Adobe. Pretty cool, huh? That was a good one. Yeah, I should probably just start playing earnings because it's just annoying to trade the option on it. That's the problem. It's not so much the movement, right? Um, it's just with when you got to deal with IV, you got to deal with this, that. It's a lot going on in terms of overall movement. Maybe if you go out much longer and get yourself some time, it'll play out fine. But I've been pretty spot on with some of these earnings. If you guys have earnings names, throw them in here and we can do some guesstimations. So that's Adobe. Obviously looks terrible right now, and I'm sure the daily time frame looks uber bearish as well. But you have a weekly bullish trend. Let's mess around here. Let's go on the monthly. Okay, so I'm thinking just by looking at this, crazy. There's bullish. Okay, so I'll give you, I think, a perfectly reasonable bullish thesis, and I'll give you a perfectly reasonable bearish thesis. Okay, so my bullish thesis would be, okay, we made this run, we filled this imbalance, leaving behind this high here, really not working on anything else other than a bearish order block here. Okay, if we were just to map out our run, we took out numerous highs in the process here with what price run, right? Let's just do this for a sec. Okay, so technically we can use this low, okay, up to, whoops, discount retracement. No, we can't. Sorry. Whoops, I didn't see that little black line. Here's your price run. No discount retracement. And this is monthly, of course. Same as our weekly. We have a weekly bullish imbalance from 475 to 432. Monthly, I'm sorry. And preferably, if I'm bullish, this stays open. We don't come here. We get into this and we take off for our first high at 638, but our ultimate, this one right here. Now I can give you a bearish idea too. So here's the bearish thesis, right? Which one plays out better to you? Where do you think our market ultimately goes moving forward, right? That could play a factor into it as well. Okay, we took out numerous sets of lows with what price run? That high to that low. There's a discount retracement into a bearish imbalance, and ultimately my model from the bearish point of view would complete at 276.60. When I can do that, right, I typically don't trade them, right? Unless I say to myself, okay, I feel much better about this side than the other, right? If I can give too good of an idea on both sides, typically that's the stuff I avoid. And I think, if I'm not mistaken, I haven't traded Adobe in a long time, but I think Adobe spreads are terrible, if I'm not mistaken, on those contracts. So just an idea. But yeah, that would be Adobe. I'm in the camp where I don't think we are gonna get smoked until rates get cut, and I don't think rates are gonna get cut until after the election. So I might be in the minority there, and I'm sure people would disagree with me, but that's just my inkling. All right, let's look at MDGI. Okay, so if you're watching on YouTube, appreciate it. Drop a like and subscribe to the channel. If you're watching this on X, please like this tweet, share it, bookmark it, do whatever. All of it is all good. I just got partnered with YouTube, so that is a plus. I'm thinking about making more videos. I'm not sure if I want to do it or not yet. We'll see. But maybe if the videos that I have up there right now, I'll just keep sharing those until more people watch them. MDGI. Okay, let's look at MDGI. We could do it all the way top down. Screw it, we'll go. Oh. MDGI. I don't even have that. We'll circle back to that one. PayPal. Yeah, I don't know why everyone loves this name so much. All right, so here's PayPal. Here's the monthly point of view. All right, the start of the price run that took out these highs here was from this low to that high. Okay, let's just see. Oh, okay. All right. All right. I see you. Ugh. Yeah. So here would be a Soul Vibes type of and here's just one more caveat, okay? As much as I believe that the market is algorithmically driven, if a company just completely fails, um, PayPal, question mark, how does that react to a chart? Great question, because that's something that I have not yet encountered. All right, so PayPal from the monthly did bounce out of that bullish fair value gap. There's one more below it, but these are the last lines of defense before 39.02, which is crazy. Let's just zoom in here. Did we have a no? Okay, no imbalance on the monthly. All right, let's work it our way down. Hold on, let me just check this. All right. So PayPal. Okay, yeah, here's just another one of those annoying situations, but I'll do it. Ready? Okay, so if we look at PayPal here, we zoom obviously on our monthly, you saw what we had currently with that overarching bullish trend, blah, blah, blah. Here on a smaller time horizon, you have a bearish trend here. We got up into discount of that bearish trend. If we are bearish, ultimately, my model finishes at 50.25. Price is holding this bullish volume imbalance so far. And if we look at it from a smaller perspective, we actually did take out that high right here to shift it on a smaller time frame. So let's just look here. Discount retracement. I can't use this low because we already completed my model there. There's your low, high, discount retracement, run for highs. So this is where I would be using, and that's dangerously close, right? I mean, look, even if you wanted to use it, something like that, it is pretty close. We don't have any, this is a bearish order block, but we don't have anything else blocking us from a run to 68.21 on that weekly time frame. But not for me. Just don't like the name at all. Everybody was talking about PayPal. Look what SQ block did this week. Created that bullish breaker. You got one right here. To me, this is a way better setup. Low, high, no discount retracement yet. You have a bullish breaker here, but ultimately you have a massive breaker here on the weekly. If we look at that most recent price run that took out these highs right here, the relative equal highs, you have this low to, let's just make sure. Yep, good. High, okay. So ultimately, you have this working inside a bullish breaker. I like that way better. And you have relative equal highs up here, 89.97 and 87.52. So that's SQ as well. But yeah, I don't know. Everybody on FinTwit loves that PayPal. I know Ryan Surface is a huge PayPal fan. He's in the audience right now. Ryan, thank you for joining, my friend. Okay. T-Doc. All right, let's look at T-Doc. Oof. Okay. Let me just do this real quick, just to be fair. Yeah. So let me do one thing. Teladoc is $15. Oh my gosh. All right, let's zoom over. Okay, so we did tap it. What's that high right here? Or low, I'm sorry. 1436. What was that? 1436. We tapped it. What do we tap here? 1429. So we did get into that monthly bullish fair value gap. Okay. Our last rejection here was that bearish imbalance. So if we go over to the weekly, we look at it here. There's your low, high, lower low, a break of this high here, and you'd have a bullish breaker. I know it seems like a pipe dream. You do have a pretty big bearish imbalance right here. Okay. So really, I just to meet my own, this would be the what's the word? It's not inverse. It's just like part 2 to my model, which I really haven't shared much. But for example, if you have a bearish range like this, right? You know, it would really be from that high down to that low that took out that low. You know, part two to my model would be, okay, even if we're bearish, right? And I mentioned this a little bit at the beginning, even if it's a bearish structure, can you play that run up into discount, right? We noticed price loves to go back up to 50%. If that's the case, can we play that, right? And the thing is, like, what's my criteria for it? And really, simply, it's just to have some sort of imbalance to the upside. And if you were to get that imbalance to the upside, um, you know, to me, that's tradable to 50%. That gives me at least a little bit of structure for my long idea that I can map out, right? Even if I'm wrong, you know, at least I have structure. Here, I don't. I mean, I guess I do below 1429, but getting below that 1429, you're still inside that monthly bullish fair value gap. And that goes all the way down to 1249. I don't know if I want to take out that much risk. You see what I'm saying? So there's a lot of moving parts there. So ultimately, you know, not really all that interested if it were to break that and then we get some sort of discount retracement. Yeah, but like at the moment, it's just not really something I would look at much. But that's T-Doc. Mara, yeah, I bought more Mara today too. So we'll look at that one really quickly. I know we talk about that one all the time, but okay. So didn't really close where I would have wanted it to, which would be 1973. That would have been ideal, but it's okay. Filled all weekly imbalances. So at this point, chop chop. This is what I'm really playing off of. Check that. Bullish order block filled our last daily imbalance completely in discount of the range. So these are the ones I like, do or die type of situations, right? I don't play. I maybe I should now that Mara is a little more expensive. When it was cheaper, it was tougher to play the options, I think. But I think now that it's a little more expensive, I think I might look at it a little bit. But yeah, we filled up all the imbalances. So realistically, you know, you can look at it from that perspective of trade goes bad below 16.14. Let's, you know, ultimately my model completes at 34.09 on this. So do not hate Mara. And here was one thing that I was curious about because, you know, I felt good about, I still do, us moving higher on Mara, but I'm like, did we hit 50% of the range into a bearish imbalance that could have potentially shifted things? Because we did make a bearish market structure shift here. But here's what I have currently. 50% of the range would be at 43. So at that point, that's where I would, you know, personally, I'm going to just be more cautious. I probably won't be buying it up there, but hopefully I can accumulate enough down here where I can take profits and basically ride free shares for eternity to see, you know, is this a legit company or not? I know Ryan Surface's opinion on that, but that's just the way I look at it, right? Because I don't care about like fundamentals or any of that stuff. To me, it doesn't really matter. But that's where I'm at on Mara. This is from a long time ago, but that was just the start of my model. Low, high, discount retracement, run for highs, right? It always sounds crazy when you're deep in discount, when no one else wants it. And typically it's the best time to have it, you know? I would prefer that because I know I could take the loss. I don't mind taking losses. I do it all the time. As long as you can pull the trigger, why would you not want to buy when no one else does, right? Usually that's the best time. Selling calls on Mara, so you are bearish, my friend. Let's see. Okay, I see a few more names. Yeah, I know. YouTube, I started YouTube way later. I'm only about a year in on YouTube, and I don't really post all that much. Twitter's my main thing. But yeah, there's 700 people on here right now on Twitter. That's usually how it goes. But I have like 1,600 subs on YouTube versus 36 or 37,000 people on Twitter, so it's a lot. Yeah, so you know, I know it sounds weird, but a lot of the times I'll watch it back on YouTube to see if I can like improve on my delivery, and YouTube is much better to watch it on. I'm not trying to sway anybody away from Twitter, but selling calls high. Oh, so like you want it to move higher. Gotcha. I think daily has put in that bullish imbalance on T-Doc. Okay, we can go back to that on the daily. Let's see. Oh, okay. Yeah, yeah. So here's yeah. Okay. So hold on. So the daily looks a little bit different. But again, the way I look at it, Grayson, it would be, and this goes for everything, but the higher the time frame, to me, the more, I don't want to say reliable, but to me, I feel more confident in a higher probability setup from a higher time frame. So, um, but of course, looking at it from a weekly, you don't want to trade, uh, you know, a weekly expiration or a zero DTE like off a weekly chart, But if we look at it from like a farther out idea, that's when I use the higher time frame. But I always want them all to be kind of moving in the right direction. So really, if my weekly time frame, and I don't look at the monthly all that much, usually when the month closes, I'll look at the monthly, but if my weekly candle or my weekly draw on liquidity is higher, so a swing high that I'm targeting, then I'll look to the daily. If the daily target is higher, I look to that. If the what is it? Then from there, I look on the hourly time frame. If the hourly time frame is good, that's usually go time for me. But I like for it to check out on all three. That way, to me, it's the highest probability, least room for error. And really, since the start of the year, I've been crushing options, and they've been on more of a what's the word? Like a farther out idea, whether it was using, monthly contracts like a month away or something like that. But I didn't swing for a really long time. I just got back into it because everybody in the Discord loves trading options. I usually just scalp futures for the most part. But um, yeah, so this is a bullish order block inside a discount bullish imbalance right here. So the model would complete at 15.95. So here's the thing, like the way I look at it is like, where does a trade go bad? 14.29. So about 90 cents to make 80 cents. You know, it's not all that great, but technically we didn't lose this bullish breaker. Low, high, lower, low. Here's your daily bullish breaker. We got below it, never disconnected from it. It's just a little bit ugly, but not so bad right now. So that is let me just come back up here. How would you get that doji from September 2022? I'm not Grayson, if you're still here, sorry man, but just let me know what you're talking about. Let's see. MSTR. Yeah, let's look at MSTR. I got a lot of analysis for this. Hold on. Okay, you want to see low Mando model gone bonkers. Low, high, discount retracement, bullish imbalances, a monthly level, gonzo. This is all I really have to say about, where is it? Here. This is all I have to say about MSTR. One more, hold on. Where is it? I know you're going to like this one, Ryan. Shoot, I forget where it is. Whatever. Oh, hold on. I think it's here. Is it? Yeah. That's all I have to say about that one. You won't go bigger? Jeez. There it is. Yeah, that's all I have to say on that one. I got nothing for you up here, man. All-time highs. I mean, I don't know about PayPal. If you like it, man, go for it. Net. Yep. So net is in discount of a bullish range. Your imbalance is down to 84.55. Nice. You do not have any imbalances to the upside minus that gap down this week. But if we look in bullish price runs, what happens when we gap down? Typically, that will create a bullish order block. So next week will be interesting to watch that. Gap down, bullish order block. 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 Gap down. No order block, but price runs higher. This is technically a gap down, right? Close, gap, run. So it happens quite a bit. Gap down, order block, and these are in bullish price ranges, right? When we get gaps down in what would be premium of your price range. So for example, something like that, a gap down, you would kind of anticipate a retracement to discount at that point. But when you get it off the lows, that's just use previous candles as your I guess your guiding factor there. So yeah, discount bullish imbalance so far on net. Let's see. Yeah, there was another Grayson. It was Grayson no 313. But he said something up there about that. Let's see. MDGL. Oh, wait, you said MU. Let's do M. Oh, no, I'm sorry. Nobody. You did that one first. Sorry. MDGL. We'll do that one. Okay. Whoa. Nice. So here it is. Wow. What the heck happened with this name back in 2022? Okay. So that's your range. That's your discount retracement into a bullish imbalance. Discounted, of course. There's your run. So my model completes here at 322.67. Are there any bearish imbalances up here? This is a weekly bearish order block we got into here. And that's about it. So far, so good. We did sweep the low to grab some more liquidity there. Got into this bullish order block here before running higher. Yeah, it's pretty good. You have this volume imbalance right here. So, just for reference, but yeah, that's pretty good, man. That can be a big one. I don't know how that trades. Like, what do the options look like, the premiums, and how do they move? Are they gappy, like say an Adobe or a Lockheed Martin or something like that? Yeah, it's biotech. Yep. Okay. MU. Okay, so let's see. MU. This name stinks, by the way, but okay, so here's the model completion. Low to your high, discount retracement, bullish imbalance, run for highs, beautifully done. Okay, so here we are, bang and bang. Hold on, let's get rid of these because we shredded those and we took buy side up here at 98.45. Is that an all-time high? Yeah, it is, huh? Okay, so this week we got into discount right here. Not so sure this is going to get left. Okay, so this would be an example of why I don't trade earnings. I would prefer price to get into there and then run higher. But that could all happen after hours. Or it could get down there and stay there and your options contract is toast. So that's why I don't like playing earnings, even though I think this is the type of move that we'll get on it. But it's a little difficult. Something like that. Yeah, we're at all-time highs too. But that's MU. I saw somebody say Marvel. MRVL. Okay, so Marvel rejected volume imbalance here. Gap down, bullish imbalance right here. Yeah, I would prefer Marvel to get going. This was untouched. This is the only thing actually. I don't know how I feel about this one now. Do we come here first, right? It would shift up our mini little structure, right? So we could play this all the way from the bottom with my model here and just do it that way. Took out these highs here with that price run, discount retracement, bullish imbalance, run for highs. Beautiful, one down. Okay, here we go again. Low, high, discount retracement, bullish imbalance, wick, body, wick, There it is, 50%. Bang, gonzo. Here's another one. Low to our high, discount retracement. Why couldn't we just get here? He just makes everything so annoying. We could turtle soup that, get into this, and then move higher from there. I wouldn't like that really, but yeah, I would prefer this to be the one. So with that being said, I'm not sure this is going to be the one, and that's why I would just not trade it. But that gap down on the weekly into discount of a bullish price run is encouraging to me. Let's just see if I'm missing out on anything. Any breakers? No. Low, high, lower, low. No. Okay. Let's just look here and see if we get any more answers. Monthly order block here. Here's your monthly price run on Marvell. Okay. Yeah, I would prefer it there. What is this? 63.53. 63. There it is. Yeah, I think that's the one. Just using the monthly as well as my guide. Let's see if that doesn't shift market structure on the daily. It would. It would. It would. Yeah, I think we're going to get into that monthly imbalance and then go. Just me, not financial advice. Okay, let's see. I'd like to see Apple. Yeah, we can look at Apple. Okay, fill the gap, meaning move higher, right? So just for reference here on Apple, here's what I just have on the monthly. So you have low, high, lower, low. Here's a bullish breaker on the monthly. Not quite in discount of your monthly range. Not saying it has to. It's okay. We did gap down. Okay. So gaps down into discount. Again, just go back in time. You might not see as many gaps in the monthly time frame, but if you were to look on the weekly, hold on. Just look at what happens when we get a gap down. Okay, gap down, order block. And this is a bullish run. Okay, gap down, order block. Okay, where else? Gap down. This is kind of what you are seeing here. A little hesitation before you make that order block. Gap down, order block. Gap down, order block. Gap down, very small. See it from there to there. Order block. Let's see. Gap down 2 weeks in between this time, but make your move higher from there. Gap down, order block. So ultimately inside week, an order block would be great. So close above this week's open. So over 173.02, get into that weekly. You're still in discount of a bullish run. You'll notice that on the we don't really have any imbalance that's untouched. This is our monthly one at 159, but below that on the weekly you have 140. So that's terrifying, but that's what it is, unfortunately, on Apple. So yeah, kind of got to get going here. GCT. Yeah, let's look at GCT. Giga Cloud Tech. Whoa. Okay. So bearish order block here. That's about it. So you're working into it. Unfortunately, a newer company don't have all that much information on it right now. This is whack. This thing is moving a lot. Jeez. I don't know anything about this name at all, but overarching trend is bearish. Bear with me. Okay. Right. We took out the all-time low with that price run. Okay. Ultimately. So if we look at it from a smaller duration, right, we took out that high with what price run? And we can look at something like this. We can't use this low. Why can't we use this low? Discount retracement, run for highs. Okay. So I'm going to use this low right here, and I'm going to go to each red candle and make sure no discount retracement. Good. No discount retracement. Good. There's your discount retracement, run for highs. So I'm currently using this. So now, unfortunately, the weekly is not all that helpful. Okay. But with that being said, we can go down to a daily. Okay. This thing is moving a lot. I don't know what the heck's going on here, but very similarly, whoops, hold on, let's zoom out just right here. Okay, and we'll go from the price run that took out that high right here. Why that high? It's just the most recent one that I'm seeing here. So we'll go from low to, whoops, high, discount retracement run for highs. So we're currently sitting at something like this. Okay, so the draw on liquidity seems to be higher here, but again, this is a bearish order block, so it could take some time to work its way up through that. Again, that's something that you can go back and back test too. Don't just take mine or anybody else's word for it. You kind of have relative equal lows here. I don't like that. Yeah, unfortunately, I don't really have much more than that. This one played out well though, from low here, the previous one, see how clean this is in comparison to what we're dealing with right now. Much better. So yeah, that's GCT. Chinese pumper. Oh, ESCO. Yeah. That makes sense. Yeah, this thing is wacky. It's moving around a lot. Okay, so if you're watching on YouTube, thanks again. Drop a like, subscribe to the channel. If you want on Twitter, like this post and share it. I appreciate that. Okay, let's look at GE. GE daily. Okay. Oh. All right. So just an absolute monster. It's got to be all-time highs, yeah? Oh, not quite. Okay, cool. Here. Whoops, here. Let me just zoom in because it's going to be a disaster trying to click it. I turned that extra strength on this magnet, but it's still kind of annoying if you're too far zoomed out. Did we take out? Yeah, we did. Okay. All right. So you have this high here. You have that one above as well. Relative equal highs, 177 and 179. Let's just zoom in more on a tighter little time frame here. And we'll look and see. This is going to have to be an immediate price run because this overall range, like I know you said daily, but weekly range is massive here. So we can walk it all the way up. So the run that took out this high right here would be from, whoops, this low to, yeah. So ironically, weekly bearish fair value gap right here. We did fill it up. See it right there. Hold on, it's not perfect. It's a little bit off there on my click, but yeah, that's where we are on that. Let's zoom out a little bit. Hold on. Sorry, I just want to get the overall idea here. Yeah, I'm thinking that buy side is the draw on liquidity here. Yeah, dang, I wish we saw this one like September of 2022. Jeez. Because discount retracement, bullish imbalance. There she goes. Yeah, I'm thinking this is going higher, but to me, the downside risk is much more. If we look at it from like a little blip in time, and if we, stay on current trend, high, low, here's your discount bullish imbalance. So 175, 177, 179, those would be the upside targets. Downside risk is about $12 to make 9, or 79 would be 11. Does that mean that you have to use 156? No, it doesn't mean that. You could try and like scalp something and say, all right, I want to use this instead, that low, 158. But really, the trade doesn't go bad until 156. But in my book, at least, obviously everything I'm saying here is just how I would view it. But yeah, that's GE. Hopefully that was a little insightful there. Kale. SoFi's coming up. I saw Mask Trader Rick asked for that. I just got two more in between. So we got Amazon here on the monthly. Okay, so let's go over here. Whoa, okay. So here's Amazon on the monthly time frame. You got relative equal highs up there, 188. That's where I think it's going. There's a retracement into a bullish imbalance right there. Run for highs. Yeah, so you're asking about the volume imbalance. This one. If I'm bullish on Amazon, I don't really want it to get down there, to be honest. Because if in, see, I have like alerts set, but if in 12 days you stay remotely close to this, you're going to create a monthly bullish imbalance. So if price gets into it, I would expect price to go off into that 188 land. So there's your turtle soup right there. Somebody said that was trending today on Twitter, right? Whoa, is that relative equal lows? Please don't tell me it's relative equal lows. 81.30. 81.43. Oh no. Yikes. I guess for the next crash. I hate when that happens. Just take the low. Just take it. Make it much more clean. Because if you go back historically and you look for those relative equal lows, a lot of the time they'll get swiped. It's just a liquidity thing. So it's amazing how small these candles are, and then you get these massive ones as time goes on. So yeah, there's Amazon. Yeah, no, thanks for waiting. Sometimes they just get backed up. So I got KOPN, SoFi, PDD, and then that's probably it. So let's do it. KOPN. Let's run it. We'll go here first. Oy. Yeah, no, I'm sorry. I don't really talk about penny stocks. Here's my explanation as to why. So if you look at a penny stock, you'll notice a lot of the time you'll get these types of moves, right? To me, that is due to the fact that external liquidity is necessary to move price, right? Versus Tesla, Apple, anything on the big board, right? Those, people don't get arrested for pumping and dumping Apple, right? It's usually insider trading and stuff, but they don't get arrested for pumping and dumping them. And to me, the reason for that is the necessary liquidity is not on the chart for penny stocks. So just to be fair, while they still oftentimes do follow the criteria for my model, I don't cover them all that much because you need external liquidity. I have 37,000 followers. It's just not a road that I want to go down. So sorry about that. SoFi time. All right. SoFi, total headache. I've been in this for so long. Here, hold on. Let's go here. Okay. So with this weekly close, we did close below last week's. Okay, we filled this bullish imbalance, but look where we closed on the weekly, perfectly in that bullish imbalance to the tick. Okay, that's pretty encouraging for the bulls. My only thing about SoFi, and for somebody like me, I really hate to say it, I really wouldn't mind it all that much if price were to come down here to 642. I'm not so sure that's going to happen. I think price can start to get going a little bit here with that close. That's too perfect. When things are that perfect, sometimes you just scratch your head. If it does go lower, that's okay for me because we still have this bullish imbalance. Our overarching trend is bullish. My expectation would be to sweep that low and bounce anyway. So, yeah, that's SoFi. Let me just look on the daily and see if there's anything. But the way I look at it, again, SoFi, really, I just said what I said about penny stocks, but you can also think of it this way. I haven't charted this in a really long time in our move. Things with lower dollar amounts or lower market cap, all that good stuff. I mean, maybe not necessarily market cap, but lower pricing in the stock. Like typically they don't move all that well, all that quickly, right? Um, so with that being said, to me, the necessary liquidity might not be on the chart, and as a result of that, that's when I think you need external liquidity. That's the only time where I think volume is a useful tool for something with, really sub 5. But, in the case of something as close to it as SoFi is, it would be kind of in that same boat. I just don't think the necessary liquidity is on the chart. I'm just looking back to see every time we've taken a low, we have bounced though. So there, 1, 2, not so much here, but here, boom, here, here, here. So, I mean, I guess technically, yeah, but this ain't bad. Really, I think you're bullish the name. There's really 2 scenarios, kind of similar to Tesla, where on SoFi you actually have one more bullish imbalance down here that was unfilled. Tesla obviously filled its last one on the daily, but it does it bounce from this point? Do we go see lows before making a bounce? It's just 2, question marks for me, and I'm not so sure. But yeah, that's SoFi. So GE looks like a meme coin. Yeah, for real, that thing is crazy. Sorry, man. Rick, I don't answer those types of questions. I hope my analysis helps you make better or learn how to kind of make those decisions for yourself. That's the whole idea here. These are not alerts. These are not anything like that. So yeah, no, just to keep it real. But yeah, same thing there, Lena. Yeah, no problem, man. Yeah, these concepts are great, man. I urge everyone to check them out. Traded 52.9 million shares. I'm not sure what it average does, but well, yeah, that too. I mean, people do give alerts. I just don't personally think they're helpful whatsoever. And I don't think it's, obviously, risk disclosures and all of that. I just don't think giving alerts is beneficial to anybody. If you learn how to do it yourself, you'll never have to look for an alert. And to me, that helps with your confidence, and you'll make better decisions as a result of it. That's just my idea. But PDD, okay. All right, PDD is our last one. Here it is, discount retracement. Oh, we talked about this last week. Go back to last week and see what we said about this one. Good spot for a bounce, that's for sure. We can get rid of this one for now too. Look at that, perfect. So we did take out the high right here. We did reject this, just worth noting. But yeah, ultimately, if Chinese names can get a hold of themselves, the expectation would be for higher. And we did sweep that high. So our next, other than completing my model there, your next high would be 169. And then that, I think overall we do have a bullish structure, if I'm not mistaken. Yeah, we do. Whoops, there it is. Deep discount. But yeah, it's PDD. I don't know. These Chinese names are a headache right now, as well as a lot of other things. So yeah, point is there's lots of liquidity on SoFi's board. Yeah, I mean, we went through each one, and we saw the sweeps and how price reacted to that. Yeah, no, man, you can learn how to do these. Yeah, so over the weekend, if anybody's bored, I have a video on imbalances. That's where I get those levels from. I have videos on liquidity. That's how we can like identify targets. I have a video on market structure. That's how I map out my fibs. And then obviously my trading model is all of those three combined into one thing, and that's it. So I did that in the beginning of this one, so I'm going to reshare the YouTube video in about 2 minutes when I get off here. And SPY was one of the first ones that we talked about. So yeah, that's all I got. So yeah, so again, thanks for watching. I hope everybody has a nice weekend, and we will talk soon.